So every week, you guys know, or every couple weeks, we do this market report and we want to look at these numbers. I pulled it off of the Calgary Real Estate Board site today. If we look at the active listings, we're at 1663. We were actually speaking with Tyro and Christina before that. There's 8,000 realtors in Calgary right now, and there's 1,663 listings. So there's a lot of realtors that aren't doing a whole lot of work right now. But also for the consumers out there, the people who want to buy either a home to live in or a rental property, that inventory is so low considering there are something like 350,000 dwellings in the city right now, and there's only 1,600 of them on the market. That's why we're seeing these crazy prices. We're seeing multiple offers, which as I got into earlier and we'll talk a little bit more about. And also that average price right now, it's finally over the 600 mark. This is for all property types together, not just single family homes. Single family homes, it's over 700 now in the city of Calgary. But we always want to put this in perspective when we talk about the Calgary market. Compared to Toronto and Vancouver, their average price is 1.2 in Toronto and 1.15 in Vancouver. So we're not even halfway there, or we're just over halfway there. So we have a long way to go if we, price wise, which unfortunately makes us more attractive to investors from all across Canada. And it again drives up prices because it's driving up demand.
Yeah, there's three big factors. Tim and I are releasing a video in 2 days' time on our YouTube channel, Calgary Real Estate Wealth. And it's all about what's going to happen with the inventory. And there's three main factors making the inventory tighter and tighter. And one definitely is the population growth. Two is the inventory levels itself is making it harder. And three is interest rates are going to be dropping at some time. We don't know when, but we know it's coming. So once interest rates go down, it's been proven, Tim runs all our stats over the years that prices will trend up even more and we can't even deal with the people we have. So what's going on with the market right now is that everything coming on is being sold and then plus some. And when we say plus some, for the longest time in the fall through parts of winter, Tim, we're sitting at around 2,200 listings on average, and then it dropped by another 600. So of the 1,600, roughly 100 are getting eaten up by new buyers. So it's going to continue this way. And we have to tell you that there's certain segments of the market or areas in the city that are going to benefit from this and do very, very well. The Northeast is one of them, Tim. We put a fellow on a search today. So when you work with us, we kind of work out your price range and then we work out where the best bang for your buck is. And so we work at a number of factors, Tim, especially on properties coming on the market and definitely what price points they're at and is it sustainable? And we've been in the market through 3 downturns. So we know the first areas to get affected when there is a correction in the market. And we know that one area would be new builds. New builds, we know that once the market softens up, the new builds is the first areas that property prices come down just because they're continuing to build. And what happens in new builds, what people don't realize is that as soon as developers can't sell their product, they offer more to their product. They'll give you a garage, or they'll give you a basement suite, or they'll give you landscaping, or they'll give you a blind package. They'll start with the blind package because that's the cheapest thing. And then that just drives down the prices because people in the boom times bought these properties and they didn't get any of that, right? So you have to understand where you're buying and what the supply levels are going to look like. We know places like Airdrie, they're going to be building tons of places up there. And Tim, we're up in Sage Hill. There's land getting developed up there. So you have to be wary of where you're buying and what those price points will do in a correction, not in an up market.
Yeah, and back to areas of the city that we're buying in right now. We used to stay away from the whole Northeast, but what we're finding now is because of the price point of everywhere else, a lot of our investors have to go up to the Northeast if they want a cash flowing property. There are certain areas that we do stay away from. There's a few neighborhoods straight up 17th Ave on the other side of Deerfoot Trail that we won't put, you know, particularly new investors in. We might put an experienced investor in, but we're not going to put a new investor in there. But the rest of the Northeast, it's fair game now because of the price movement all around the city, all the other three quadrants. The Northeast is becoming affordable, and Calgary is still a relatively safe city. We don't have the high crime that the larger centers, you know, in Toronto in particular, and every big American city, they have high crime. We don't have that. You might seem like we have that because you hear the stories in the press about, you know, gun violence or whatever. But relative to other large cities in North America, it's very, very safe here. So we just have to educate our investors on that. And going into the Northeast, we started there because that was our price point, you know, in the early 2000s. And now for people, they may have to start there as well, and then spread out once they develop or once they acquire more and more assets and more equity, and then they can use some of that equity to buy the higher priced homes in the other quadrants.
Yeah, we started buying in there when we first got in the market. And I just want to send a congrats out to one of our crew investors, Dennis, who just waived conditions. He bought a beautiful property in Marlborough Park. And anyway, I won't get into the pricing because it's private, but he got a double car garage, a beautiful, what would you say, Tim? Well-kept bungalow, a bi-level, and bi-levels, we need to stress this. So we were working this out the other day when we were in Dennis's bi-level. We love bi-levels as suited properties, and we're trying to, it's not just because of the big windows. We would always say, oh, they got the bigger windows because you walk down. What they also have is, you know, the high ceilings, because a bi-level is already built to have the same ceiling height as the main floor. And when you get into some of these bungalows, what happens is the vents for the heating ducts are lowered on sometimes, Tim, most of the space down in the basement.
Yeah.
And so the bi-level doesn't have that, which is awesome. And so Dennis picked this property up, and you know what? You have to think outside of the box right now, because if you're looking for a suite of property, there's only a handful on the market. So Dennis is going in there instead and putting the kitchen in. And that's where we see adding value. And once you do legalize a basement suite, you know, it could cost you, depending if you're like, I've done one like Dennis's for $50,000 to $60,000, but the value could be $100,000 more in this market on top of that, once that kitchen goes in and it's a legal basement suite. So congrats to Dennis for buying that and taking our advice. He started off not wanting to invest in the Northeast. He lives down in Auburn Bay.
Yeah.
So for him to easily come up Deerfoot or take Stony and cut back in, it's really not that far for him to get to his rental property. And not only that, with the Northeast, which is going on right now, it's going to continue to go up in value because it's the most affordable. There's the most affordable areas in Calgary right now, and that's just going to drive the market simply just because of that.
Yeah. So back to the numbers here. Going forward, we always tell our investors to keep an eye on these two rows here, the active listings and the average price. You can get this information on the Calgary Real Estate Board website. Keep an eye on that because the active listings will determine whether you can get the property in the price range you want. Being so low right now, it's very difficult to get certain properties, and the average price, it's continuing to go up. It's already up almost 12% in the first 3 months of this year. It's already springtime already. Today's the first day of spring, but 12%. And we were predicting at the beginning of the year 4%.
Yeah.
So if inventory continues to stay as low as it is, and demand stays as high as it is, if interest rates start to come down a bit, you're going to see that average price go up. So Calgary is becoming a higher priced city. You're going to have to go to, you know, Saskatchewan if you want to see Calgary's prices from 5 years ago. So keep an eye on those as the year goes on. We'll see if our builders can ramp it up and build enough inventory so that that levels off a bit. Hopefully it can. But again, you know, it's anybody's guess right now. So that's our market update on the real estate side. On the mortgage side, we usually have Danielle DeMarco, who's our real estate investment mortgage expert, come and talk. She's kind of busy this evening. So we just want, if you're looking to have an assessment done to see if you can buy your next property, or if you're looking to buy your first property, we always recommend you speak to a mortgage broker. Danielle's contact info is there, so you can take that down. If you had an initial meeting with us, we would send you to her first so that you can see where you are and where you're gonna be.
Yeah, and it doesn't matter if you can't qualify for a mortgage. We just want to know where you're at financially, and then we put a strategy in place to move you forward no matter what. So that's always the first step. If you wanting to become a real estate investor, work out where you are financially, and then there's many other avenues to get into the game as well.